Welcome back, everyone. Today we are going to be taking a look at the advantages of trading Forex, continuing on with the beginner's trading course for all of you guys that have been following along. If you're just tuning in and this is the first video you've watched in the series, I would definitely recommend going back and starting from the first video, as we are putting out a lot of videos covering a wide range of topics, everything you really need to know to have a good foundation before you start trading in this market. So before we do get into the video, for those of you guys who are new here, our content is focused on comprehensive financial education for traders, investors, and entrepreneurs. So if that sounds like you, consider subscribing for more content, as we will be ramping up the content that we're releasing and getting into some more advanced things after we finish this series. So for anyone that is interested, we are going to be launching a free weekly newsletter tailored to actionable information and education for traders. So if you want to subscribe to that, again, that's going to be completely free now and forever on. It's not going to be any BS, nothing like that. Only going to be once a week, so it's not going to be showing up in your inbox every day. Just information that we're going to be writing about, education for traders, and valuable information for you guys. So it's going to be launching sometimes later this year. So if you're watching this at that point, definitely subscribe and check out the content that we've been posting. But if you're watching this right when the video comes out, you can go ahead and subscribe and obviously wait for the first piece of content. So getting into today's video, we've been going over some of the history in the Forex market, how that plays into how the structure has been built up in the foreign exchange market. And one thing you guys may have noticed is that it's a very decentralized nature that the market takes on, which I prefer way more than markets like equities markets in the US or anything like that. So I'm sure you guys can already start to see the advantages of trading Forex, especially compared to other markets, which is going to be some of the next videos that we discuss, specifically comparing Forex to, say, the stock market. But in this video, I want to discuss the advantages of Forex trading. So if you guys do want to check out a text version of these lessons, we are following along with the curriculum over on the babypips.com website. So we are leaving the corresponding links to those pages down below in the description if you want to check those out and compare or review. So getting into the first slide. So no commissions. So since most retail Forex brokers are compensated for their services through the spread that we previously discussed, there are no costs in these areas. So no clearing fees, no exchange fees, no government fees, no brokerage fees. So that is quite the difference from, say, equities. Obviously, equities have become much cheaper over time, zero commissions on trading stocks or anything like that. But there are other hidden fees and things like that because it is a more centralized market. And until that becomes a decentralized market, I think there still will be fees. But moving on, no fixed lot size. So in a market like futures, for example, lot sizes are determined by the exchanges. So an example of this, standard deviation for a silver futures contract is 5,000 ounces. So spot Forex allows you to determine your own lot or position size. So this would allow traders to participate with accounts as small as $25, which of course is not something we recommend, not the best idea for many reasons that we've discussed previously and that we will discuss later on, but we'll discuss that a bit later in some of those other lessons. Next, we have low transaction costs. So the average retail transaction cost on the bid-ask spread is normally less than 0.1% under normal market conditions. And for larger transactions, the cost could even be as low as 0.07%, depending upon your leverage and some other things as well. So very, very small transaction costs, and we already discussed no fees. So a very affordable market to trade in, and you can really get started with a low amount of capital, which we'll talk about the recommendation for starting capital, but that's just something to keep in mind. A 24-hour market. So this is a huge thing for me. And of course, I'm sure a lot of you guys watching and why you may have decided to go into the Forex market. It doesn't close or start at a certain time. So if you're not in the US or you're not looking to wake up at a certain time or anything like that, the Forex market is perfect for you. So especially beneficial to those of you who want to trade on a part-time basis because you can pick and choose the times you want to trade. So if you want to trade in the morning, the afternoon, the night, even in your sleep, if you want to just if you have time to scan it, one day a week on a Sunday and look for setups and only want to place a few trades every single week, you can do that. And that's not necessarily the best strategies for something like equities or something, at least being an active trader over in those markets. So really nice benefit to trading in Forex, 24-hour market, 5 days a week. No one can corner the market. So the foreign exchange market is so huge and has so many diverse participants that no single entity can control the market prices for an extended period of time. So liquidity, volatility, and slippage, those are three things that kind of fit into this slide right here. And that's huge for me. I really love the decentralized nature and how no one person or one entity, as we just stated, can really control the movement or the market, where the market's heading or anything like that. So that was really big for me, switching over to the Forex market after moving on from some other markets that I've been trading in over the past few years. So leverage. So as we discussed earlier, a small deposit can control a much larger total contract value in Forex trading. Leverage gives the trader the ability to make nice profits while keeping risk capital to a minimum. An example of this would be a Forex broker may offer 50-to-1 leverage, which means that a $50 margin deposit would enable a trader to buy or sell $2,500 worth of currencies. Similarly, with $500, one could trade with $25,000 and so on. But keep in mind that leverage is a double-edged sword. Without proper risk management, a high degree of uncontrolled leverage can lead to large losses as well as gains. So that's obviously something we're going to cover very in-depth, risk management. But compared to other markets, this type of leverage really isn't seen in, say, equities or anything like that. If you guys, a very common app for retail traders, if you guys have used something like Robinhood, for example, and you get the gold version or the gold membership, I think you can have like 2-to-1 leverage trading equities, or I think it goes a little bit higher than that. But that's just something to keep in mind. If you guys do want to take advantage of leverage, Forex is definitely the market to do so. High liquidity. So kind of mentioned this a little bit earlier, and we've talked about this in some other lessons, but due to the sheer size of the Forex market, which it is the largest market to trade in, it is extremely liquid. So this is an advantage because it equates to instant buy and selling under normal market conditions, as there will usually be someone in the market willing to take the other side of your trade. So even in bad market conditions, at the time of making these videos, we are going through a very historical economic period with the virus and everything like that. And equities, futures, normal markets that are much smaller that we discussed at the beginning of this whole course, the markets that are smaller, stock market specifically, have seen incredible issues of liquidity and just massive losses in such a short period of time because there was no one on the other side of the trade. Whereas in Forex, there has still been more than enough liquidity to support all of the massive volatility that's been going on. So a real-time example of this, we've been seeing it at the time of these videos, and it's very interesting to see how that's been playing out. And that's something that I've been very glad to be in this market specifically, so I'm not dealing with that, just one extra thing that you have to navigate when you're trading. So you can set your platform to automatically close your position at a certain profit level or even cut losses if the trade goes against you, stop loss order. So you're never stuck in a trade. That's a big thing that you want to keep in mind, and you don't have to just sell to the lowest price or the best price you can get, which may be extremely low compared to what you want to sell for. There's always going to be someone on the other side of the trade at the current price. Low barriers to entry. So we mentioned this compared to trading stocks, options, or futures. Getting started trading Forex is incredibly low cost. Now the costs of trading other markets continue to go down and almost equal out to Forex, but online Forex brokers offer mini and micro trading accounts, some with a minimum account deposit of $25. The biggest point here is you really can't say put in $25 and then control 50 times $25. Again, not something you want to be doing, not the ideal circumstance to open an account, but it does show that Forex trading is much more accessible to the average individual in relation to startup capital. So that is the last slide we have for you guys here, just reviewing some of these. As you can see, But again, those are some of the advantages of trading Forex. And in the next couple lessons, we're going to discuss comparing specifically to other markets and how Forex goes up against those markets. So hope you guys enjoyed this lesson. Hope you guys are enjoying this series. If you haven't seen all the videos, or this is the first one you're seeing, definitely go back and watch from the beginning so you guys can build up a good foundation before you get into trading in these markets. So hope you guys are enjoying, and we'll see you guys in the next one.